Yeah, good morning, everyone. So Friday we saw again US market correcting sharply, mainly driven by the positive figure on unemployment data, whereas the unemployment percentage has further declined. It has come down from 3.7% to 3.5%, wherein the people believe now that the Fed will continue to remain hawkish and tightening will continue as the impact of whatever the Fed has done up till now is not getting reflected in employment or slowdown of the economy. Uh, Apart from that, the oil prices also moved up sharply, which is also having impact on the inflations. So that is again having its overall impact on the overall directions of the Fed. So that has acted negative for US, and futures are also marginally down. And in the Asia, various market, including Japan, is closed today, but the market which are open are down. Uh, and apart from that, on the other hand, commodity are showing some positive trend, wherein oil has moved up from around 94 same time Friday to around 97, and even iron ore is up by around over 2%, and steel is up by around 1% in China today morning. So seems more of a negative trend for India as well, as the word is indicating some downward trend. Now I request technical team to talk first.
Thank you, sir. Good morning, all of you. This is Ayush Mehta. I'll be covering the technical part today. So, if you see the Friday's market, it was a flattish closing, and it has closed around 17,300 odd levels. And taking the cues from the global markets, we feel it is going to be a gap down opening in the Nifty, and Nifty is going to test its 200 DMA levels in today's session, which is coming out to be around 17,000 odd levels. uh, Once Nifty closes below 17,000 levels, then we might see a further selling pressure in this index. Immediate support before 200 EMA is currently placed at 17,070, and once 17,070 is broken, 17,000 will be the support level, followed by 16,900. Whereas if there's a support buying seen in index from 17,000 levels, then the immediate resistance is currently placed around 17,300 to 17,400 levels. Whereas Bank Nifty has taken a strong resistance of its 50 DMA, which was around 39,170 levels. And today we feel Bank Nifty will be seeing a selling pressure as well. And the immediate support for Bank Nifty is currently placed at the psychological, and it is also psychological support level, which is 39,000. Once it closes below that, then it might test 38,700 to 38,500 levels on the downside. Moving on to Nifty Financial Services, this index has an immediate support at 17,680, followed by 17,590. Overall view will get cautious once Nifty closes below 17,000 level, and we request everyone to trade with strict stop losses. We will initiate a conditional call once in Humans India. Once it closes about 12:30, we'll initiate a buy call. We'll recommend you to buy that for a target of 1320 by keeping a stop loss of 1190. But it will be a conditional buy call. That's all from my side. I request Nirav to take the call forward.
Yeah, thank you, Ayush. On the derivative front, I'll be talking more about the data. So, at this point of time, as I've been saying, the data is not negative. So yes, we are opening down, but 17,000 put has the highest open interest amongst puts. That will act as a strong support area. Even 17,300 where we closed, we are seeing some good put built up from 17,300 200 strikes. The PCR has gone below 1. It can go down towards 0.7 odd. Even the VIX, even though we closed flat, the VIX came down from 19 and a half to below 19 levels. So all in all, looking at the data, I do believe we might remain range bound in the next couple of days, where 17,000 may be tested, but overall the data is positive, so we should bounce back. And and 17,000 is the level from where this bounce back can come in. So I believe buying on dips would be the best strategy going forward. Uh, from the stock specific front, looking at the stocks, some selling for today can come in the banking space and technology space, but I don't see much selling coming in post the first 1 hour or so. So look out for the same. Some good rebound can be seen in stock specific front, where finance sector might lead. M&M Finance, L&T Finance, Bajaj Finance, all of these have witnessed good liquidation of longs, covering of short positions, and most likely these stocks will now start to rise from here. Even auto space looks good, so even auto space can be looked at from short covering perspective. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Quarter 2 update for Bandhan Bank was neutral. Advances grew 2.8% quarter on quarter, which is below the system level growth. And also we have seen that most of the MFI and SFBs who are into microfinance have posted good sequential growth, but this is not the case in Bandhan. Loan book is now at 99,000 crores and year on year basis 22% higher. On the collection efficiency front, it is marginally higher. This quarter they have reported the collection efficiency which excludes NPA and restructuring loans. So then it doesn't make that much sense, although reported number has increased marginally from 94% to 95% sequentially. So we remain neutral on Bandhan Bank. Star Health quarter 2 update has improved. Last quarter also they posted good growth in the retail health. This quarter also retail health grew by 22% year on year. This is 92% of the total premium income for the company. Although the retail group side witnessed a decline of 54%, which is around barely 6% of the total premium income. So because of this decline on the group side, the overall gross direct premium income grew by 11% year on year. But I think we should focus on the retail health segment, which has done well. Lastly, on IDBI Bank, there is latest news that government has invited bids for stake sale in IDBI Bank, and in the divestment, the government will offload 30% stake. LIC will also sell around 30%. Currently, LIC holds 49% stake in IDBI Bank. So it will be positive for IDBI Bank in a big way, and also somewhat in a small way positive for LIC, because LIC will be getting around at current market cap of IDBI Bank around 15,000 crores minimum LIC can get, which it can pay in terms of dividend or any other way to shareholders. Thank you.
Good morning, everyone. Traxon Technologies IPO is opening today and closing on 12th October. The price band is rupees 75 to 80. Traxon is among the leading global market intelligence provider that offer customer private company data for deal sourcing, identifying M&A targets, deal diligence, etc. through its subscription-based platform. The company has 1139 customer accounts in over 58 countries. 23.4% or 267 active customer accounts have been associated with the company for over 3 years, indicating customer stickiness is low. Over FY 19 to 22, the company's sales has grown at a CAGR of 24.1%. The company in FY 22 was loss-making even on operating profit front. However, management indicates with growth in the revenue, the company is able to increase the efficiency, which in turn will lead to higher profitability. The same is visible in margins, wherein in Q1 FY 23, EBITDA margins came in at 1% versus a loss of 4.1% in Q1 FY 22. At the upper price band of rupees 80, Traxon Technologies offered at a EV by sales of 12.3 times which we feel is expensive. We recommend avoid to the issue, as only 23% of the customer are 3-year old, indicating customer stickiness is low and valuations are high. Other than this, TCS is expected to post results today. Dollar revenue is expected to come in at 6895 million, which is up 1.7% QoQ. EBIT margins, which dipped last quarter to 23.1%, is expected to improve this quarter and come in at 23.8%. Key things to watch out would be the demand outlook for FY23 and 24. HCL Tech is to post results tomorrow. Dollar revenue is expected to come in at 3069 million, which is up 1.5% QoQ. EBIT margins is expected to improve QoQ to 17.5%. Key things to watch out would be whether the company retains the revenue guidance of 12 to 14% and EBIT margin guidance of 18 to 20%. On the margin front, last quarter the management had guided to be on the lower end. Wipro is expected to post results tomorrow. Wipro is to post results tomorrow, and dollar revenue is expected to come in at 814 million, which is up 2.9% QoQ. EBIT margins is expected to improve QoQ to 15.2% versus 2% versus 14.3%. Management had indicated the company would have wage hike in September, so that is likely to impact this quarter. Key thing to watch out would be guidance for Q3, commentary on client budget, and the demand environment. Thank you.
Yeah, apart from this, Atul Auto has said that the large investor Vijay Kedia, who is already an existing investor in the company, will be subscribing to 50.5 lakhs warrant in the company at the rate of 195. In fact, Atul Auto is purely in three-wheelers, where the recovery is still quite weak, and they are not able to grow the reach still far off from the pre-COVID level. Pre-COVID level, yearly they used to do around 60,000 vehicles, whereas right now they are still doing 6,000 vehicle in the last quarter, which is almost around 40% of what they used to do pre-COVID. So still there is enough headroom for improvement still pending, and that's why the company is incurring losses in last many quarters. With this investment, company is expanding its EV portfolio. Earlier it used to be only in the diesel, then from diesel they had expanded to CNG, and now also in petrol, and now they have EV portfolio also. But now they are expanding to more advanced version of EV three-wheelers, which will be coming up in coming period. And the investment is for to support the growth and to finance the working capital. And apart from that, even Atul Auto has an NBFC, which is also reasonably okay, doing well, and is reasonable size to fund the Atul Auto's sales and also to two-wheeler financing. So seems like for an investment perspective for a longer period, with a market cap of around 470 crores and very limited loans, around 80 crores loan, it looks comparatively positive for the company. So if someone is looking for the long term, then quite possible it can be taken as an opportunity. Then SH Kelkar has come up with a quarterly update on revenue and debt, wherein they had said that the revenue for the Q2 is around 412 crores, that is including around 36 crore of acquisition revenue. So excluding that, the revenue has grown by around 7% year on year. And in that, emerging market revenue has grown by around 12% to 331 crores. Company profitability is moderately impacted due to higher input cost in this quarter. So profitability margins will be lower than the previous year. And also the debt has increased marginally from around 690 crore in 30th June to 470 crore to 503 crores, almost increase of around 30 crores in this quarter. So more of a neutral set of the update which the company has given. Then Tata Motor has announced JLR numbers. These were a bit declining numbers. In the sense, the expectation was that the wholesale number should come at around 90,000 for JLR in Q2, which the management has also indicated in last phone call, but the wholesale number has come only at 75,000 in this quarter. So that will act as a negative for the company, though company has indicated that the free cash flow generations was at break even. So no burn of cash which has happened in this quarter, which was the case in last quarter. So overall seems negative, but overall order book continue to remain strong for the bank, for the company. The order book came at around 2,05,000, which was around 2 lakh at the time of at the end of first quarter. So order book has further increased. The sale is at around, retail sale is at around 87, around 79,000, and against that the order book is quite strong at around 2,05,000. So the main hurdle is availability of semiconductor. Still the problem persists for JLR, and this is keeping the sales side weak. And once this company has expect that this should improve in the second half, and the sales should bounce back in the coming period. So the data is declining and may have some marginal negative impact on the stock. Now I'll hand it over to commodity team.
Thank you, sir. Good morning, everyone. Dollar index has started to rise again with the support of 110. So this has resulted in fall in commodity prices internationally as well as on MCX. So overall prices could be under pressure. Gold one can sell at a pullback around 51,750 to 800 with a stop loss above 52,000. So prices are expected to cool off and test 51,350, 250 on a lower end. Silver also we expect a pullback. If 59,400 holds, then a pullback might come till 60,000 to 60,200, whereby again selling pressure could be witnessed. And overall, if 59,400 sustains below that, then we expect prices to test 58,500 on lower end. Crude, however, seems to be positive. So buying around 7,500 is recommended, and one should maintain a stop loss below 7,400. So overall looks positive. 50 to 7,700 is expected on higher end. Natural gas, if 555 sustains above that, then we expect a pullback till 565, 570 levels. So if sustains above 555, it is recommended to go along with a small stop loss. Copper also, if 651 is sustaining, then a pullback till 656, 57 is expected, whereby again selling pressure will be witnessed. So overall, copper could be in a range from 648 to 657. zinc also prices are expected to correct. One can say around 278 levels, and prices are expected to cool off till 272, 271 levels on the lower end. That's it from me. I'll ask Ria to take over from here.
Thank you, sir. Good morning, everyone. So, on the currency front, the US job data came on the stronger side. We non-farm payroll increased by 263K in September, whereas unemployment rate fell to 3.5% as a previous from 3.7%. Even there is a rise into the average early hourly earnings, and however, the work week remains unchanged. Overall, if you look at the employment numbers, they have come on the stronger side, which has pushed the anticipation in the market that Fed again has the grounds to go for an aggressive rate hike. Thus, you can see that dollar index have been pushed on the higher side and is currently trading near the levels of 113. So, if overall the same sentiment is being reflected into the emerging market currencies as well, Indian rupee has opened on a depreciative note towards the above the level of 82 point. It marked the high at 82.85 in today's open. Today's support is placed at 82.70 and 82.55. If it breaches the level of 82.70, it could go towards 82.55. However, the momentum remains strong, and I think in today's session it could test the highs of 82.96, 83.23. So you can go long into the USD INR. In other pairs, in Euro and GBP INR, the momentum remains weak. GBP INR could test 91.43 in today's sessions. However, for Euro INR, it could test 80.46 levels. So you can go short into both the pairs. From the once there is some retracement on the higher side, thus go short into Euro INR and GBP INR from the highs. That's all on the currency front. Thank you.